We'll upgrade to Riverside. Maybe they heard some of our gripes. Jeez.
They might have been needing some.
Yeah. The amount of crap that we've had with Riverside in the last 2 months. I don't mean to badmouth them, but we've lost footage. We've gotten kicked out. We've had where both of our audio and video don't sync up. And actually your audio and video haven't sunk up for 4 weeks. So I don't know what the heck's going on. But
I feel like my internet's gotten better too. I always
Yeah.
felt like we had issues early on if my Wi-Fi was bad, but I'm hard connected. It's pretty good internet, but
seriously is a struggle though of a virtual podcast. One that I would have never thought about is the connectivity of it. And I don't know if other services would be better, but man, these issues are causing a ton of extra work in the post-production process, which I am not thankful for. I can definitely tell
and it
you
was
that
the
much.
reason why we went to Riverside is so you
Yeah.
didn't have to worry about that stuff.
Yeah. Geez. Well, I can tell you this much, that those issues are almost as dumb as the naming of legislation that comes out of the U.S. Congress. Really looking forward to the episode today because we're talking about the Biden's Inflation Reduction Act. But man,
Yeah.
Who names these things? And they don't even mean what they mean half the time.
I mean, I think when we were talking earlier, it kind of was they just play chess with these entire bills. And it's the Inflation Reduction Act. So if you come out against that, it's what, you don't want inflation to go down? It's that's not necessarily the case. It's the stuff that's in it is what I wasn't wanting to vote for. But they just name it these things that you can't not vote for.
You know what I just realized is that if you read this the right way, it kind of is comical. So if you read it, Biden's Inflation Reduction Act, as in the inflation Biden caused and now reducing it.
We have to reduce it. That is
all right,
pretty
man.
funny.
Let's get into this episode. Hello and welcome to the Neighborhood Money Podcast, a video podcast here to help you build a life you deserve. I'm Cavan, that's Drew, and today we're going to talk all about Biden's Inflation Reduction Act, what's in it, what it means for you guys, and potentially, Drew, we might get into who are some winners and losers in the stock market, because this is a personal finance podcast. We for sure got to talk about the money side of the house, but we'll talk a bit more about some of the main topics of the bill, give our opinions. I mean, based on the conversation, Drew, we had before this episode, it might go who knows where, because I think we both have some gripes and many different facets of how this thing's rolling out.
Absolutely. It's this bill that's coming through, being the Inflation Reduction Act, as we're talking about dumb names, it's doesn't seem like it's really going to reduce any or inflation. And if it does, it's going to be by accident, I think, because the few things that are popping out as headlines for this act have been really everything but talking about inflation.
And it's a spending bill. That's how we got here in the first place.
Yeah,
government spends, inflation goes up.
$740 billion spending bill.
Yeah.
We're just going to print money to curb inflation.
I'm not an economist, but I'm pretty sure if you spend money, inflation will continue. I'm not sure there, though. Maybe there's some experts out there, but who's to say?
And, that might be our hint. I think there's always stuff that goes through with politics and Congress that you might agree with or not agree with. And I think it's up to us to find a way to make lemonade out of these lemons. And if it's going to be a spending bill and they're going to be inflowing money in, and it looks like they're going to be pushing some stuff towards some EVs, electrical vehicles, maybe that's an opportunity for us to look into investing into that, because if they're going to be investing money into these electric vehicles and stimulating the economy that way, you might be able to take advantage of that.
I like where you're going, Drew, but let's hold the reins quick, because first of all, let's talk about this bill. So this bill is pretty massive, and I've heard people say that it's one of Biden's best things that he's done, or whatever that means. But the bill itself has three, I would say, main features that go along with this. So first, it has an emphasis on green investments. And so the bill is going to plow $369 million into green energy investments. So really transitioning the economy, or helping the transition of the economy from fossil fuels, coal, gas, to renewable energies. That's true where the electric vehicles come into play. They're going to expand the tax credits for electric vehicles.
Up to
Won't
about
go into
260 billion
exactly
in those tax credits.
Exactly. And I don't remember I think there's a certain limit of the amount of car you can buy if it's like 50,000, but it's going to incentivize some people to move in that direction. The next thing, Drew, is that now, so previously Medicare and prescriptions, when you're on Medicare, they could not negotiate prices, which if you know a little bit about economics, negotiating prices is going to allow you to have lower costs. Well, that wasn't necessarily the case, but this bill actually is going to now allow Medicare to negotiate their prescription prices, which in theory, we'll see if it plays out this way, will lower the cost. So if you are on Medicare, or if you have a loved one on Medicare, or if you're going to be on Medicare shortly, this is a big win for you, I would say. I mean, we're going to have to see how it actually plays out, because nothing is never what it actually looks like on paper. But it does seem that, in my opinion, lower prescription costs it's a heck of a good thing.
It's been a fight with, I think, Big Pharma on these prescription drugs, and just like any type of drugs, forever, really. It seems like, and I know, a couple years ago they were trying to fight against pharmacies, and then now you're seeing this come through, and I think pushing back against them is good for the people that are using it, because these stuff that people need are spending a lot of money on it. I actually I think I read something where Mark Cuban, the guy in Shark Tank, or owner of the Dallas Mavericks NBA team, he started a online pharmacy, I believe it was, and it's nothing where insurance is able to reimburse, but he's only putting a 15% mark on all the prescription drugs that he gets. So as long as you get a prescription, or like over the counter stuff that you need, that is like, say, $100 for your insurance, they put in a 15% markup across the board. Supposed to be some cost saving. I think there has been a big fight for that, especially in the last probably year. People are really seeing their health drastically, and this is a good way to kind of start the curve. So I'm not sure if all of what I just said there with Mark Cuban and the prescription drugs actually came through.
Speaking of having Riverside and technical difficulties, man, that was like 8 minutes in only.
Yeah, and I just had to exit out and come back in. But anyways, when I was talking, basically what we're talking about with prescription drugs is, I guess, if you are going to be curbing inflation, I guess by saying negotiating prices, in theory, could drop them down. And I don't think anybody's against dropping
definitely
medicine that people are living off of. So
totally agree. And then this third piece, Drew, is what I am most interested to see how this actually plays out. But it has to do with taxes, and specifically corporate taxes. So it's going to put a minimum of 50% on the corporate income tax. So, for example, you have companies that are paying less than 15% legally due to the tax code. But then also, here's a really interesting one, and I think it's going to make a lot more sense when we talk about some of the winners and losers of this bill, is they're going to put a 1% tax on all share buybacks. And so a share buyback is essentially, say I'm Amazon, I issue shares, in 5 years, I now buy some of those shares back. What that does, it raises the price, or it appreciates the price for all the rest of the shareholders. And so it's going to force these companies to now pay that 1% fee, rather than just giving that money back to their shareholders. That one I'm super interested to see how it plays out.
For them to push something like that through is kind of surprising that it actually got through. With they always talk about like special interest type of deals, and a stock buyback is like really what you're saying is like just supply and demand type of deal where you're taking the supply out of the tradable market. So in theory, there's going to be more demand for it, less supply, and the price should be going up. And maybe a 1% tax, maybe they don't care and they'll continue to do it. And I think the shareholders actually prefer share buybacks. I would rather have a company I'm invested in buy back their shares than actually, issue more shares into the market, because that would just be like we're talking about inflation in a way and making the value of that stock go down. But I wonder if, part of it would incentivize them to put more money back into the company, and maybe that, if there's a minimum 15% tax, there's always, a lot of ways around that. And maybe there can be incentivizing of, we'll give you better deductions if it goes towards payroll or more towards your assets or more towards land that you buy or whatever it may be. So it might be able to facilitate more buying or money going back actually into the company instead of just taking shares out of the market.
Yeah. Or they could there's other ways too. They can give it to the shareholders, so they could issue dividends, right? However, that's kind of crappy from an investor standpoint if you're not expecting dividends, because you have to pay tax on dividends when you receive them, unless you're in a special account, like a Roth IRA or something like that. I personally don't like the idea of taxing the stock buybacks from an investor standpoint, because I like seeing my investments, my stocks appreciate, because again, I'm not being taxed on that appreciation until I actually sell. And so it doesn't impact my tax liability in any way, shape, or form. And if they're going to switch it and I'll start paying higher dividends out, well, then it's, you're paying a higher tax bill now, which I know it all comes full circle. In the end of the day, the government's going to take their money, but it is just something that I would rather have appreciate over time rather than pay a tax on the dividend today.
Yeah. So those are pretty much the three main points of this bill. And, I think if I were to add something just on top of this bill, is this Inflation Reduction Act is pretty much saying, I think in a nutshell, of we're going to collect more tax revenue and we're going to be giving you more tax credits on green energy. And this is going to potentially supposedly supposed to reduce inflation. I guess I don't necessarily see how that is.
Right.
It's more money printed. We're going to spend money, and then we're going to collect more taxes.
Yeah. So, which tax, don't get me wrong, tax is a way to reduce inflation, right? If you think about it, if you play it out in a slightly different way, where if you raise income tax, right, of people, well, that means they're going to have less money to spend, and now they're going to spend less and thus lower inflation. I just don't see how, if you're taxing corporations, maybe there's like a trickle down effect. They're going to get taxed, and then they're going to potentially pay workers less, and then that's going to then drive lower spending. I'm not really sure the thought process around it, but
it's kind of funny. Like, you think of when the Fed tries reducing inflation, what they like to do is increase rates. And then with this, they're trying to say we need to tax more. And then when you think about it, you're saying, okay, well, if it's harder to do this, you're not going to be spending as much. If you don't spend as much, it's going to reduce inflation. But it's funny that the way they do it, they're like, we want to make sure that your quality of life goes down so that inflation goes down.
That's what it is, though. Like, as shitty as it is at the end of the day, like when inflation is high, that probably means like people have a lot of money, spare money on hand, so they're spending more. And the only way to curb that is to limit spending.
I suppose that would be like kind of type of deal of, just initial personal finance foundation. But it's funny that, I guess that's kind of the foundational principles. I just hate that it's the people that can put you in a certain circumstances will be like, all right, we made it worse off for you, so then we're going to make it worse off again for you. to get back
Yep.
so that we can do this again.
Yeah. Sounds like you're becoming a Bitcoin maxi, Drew.
I
Bitcoin
am, yeah.
maxi. Maybe that's a future episode. We'll have to dive into that because I'm right
But
on
yeah,
board with you. But so let's talk. Or go ahead.
I was gonna say, like, speaking of like more taxes, is like I think a lot of people might, if they've heard anything about this bill, they've probably heard some talking points from one side or the other. But like one of them was the IRS will be increasing their staff by like 87,000 agents. And I think something interesting about that was the IRS will then employ more than it was the Pentagon, State Department, FBI, and Border Patrol combined. And that was kind of like another talking point, I think, if you've gone through that stuff. But that is interesting to put that in perspective, that the tax collection is going to be bigger than most of your big crime solving agencies and law abiding stuff. So,
well, geez, I mean, they're so far behind in doing tax refunds that they need the help. I don't know if 87,000 is the right answer, but maybe they'll get some tax refunds out a little bit quicker.
I saw from that Tom Wheelwright, which is like the tax accountant for that Robert Kiyosaki, the Rich Dad Poor Dad book guy, and his TikTok, he was actually talking about this act a little bit, and he said 78 to 80% of tax revenue comes from people making $200,000 or less. So if you're going to be increasing your IRS agents by 87,000, it's not going after the big corporations. It's going after your money makers, which are going to be the 200K or less, which is going to be majority of the people.
This is kind of a side tangent, whatever, but it is interesting. I wonder if like they're just hiring to meet the demand of the amount of people that are putting in income tax or filing taxes, or is it really to hire more people to collect more taxes on top of what's already being collected? I have no idea. I know there's a huge backlog and when people are filing taxes and getting those processed. So I'd imagine a good majority of it is that. But
my opinion is they're going to be wanting to collect more. And the reason I say that is earlier this year, they passed like another bill of saying any of those peer-to-peer third-party cash provider or payment processors are having to
that's right.
issue somebody a 1099 if they have $600 more in transactional fees to like one type of person. So that right there, trying to say they're trying to collect more tax. It's supposed to be a peer-to-peer cash system of just saying, you know, here's $20 for, you know, for you buying something, and here's my share of it. And if it gets over $600, they have to issue 1099, and then that could be something that could have to be something looked into, or if you had an audit by the IRS, that would have to be checked on to make sure that it was actually for a certain situation. So the reason I think it's to collect more money is because of that bill getting passed earlier, where they're constantly trying to get more tax from the small cash black market that I think Bitcoin actually fixes too.
Heck yeah, it does. But no, I
as long as you're not a centralized exchange.
I agree with you though that they do have those smaller things, like the $600 limit with the 1099. I could see that hiring some of these people are trying to increase revenues from the under the 200K. We'll see how that plays out. But Drew, if we move into winners and losers, so here's the fun part. That's kind of like the legislation, how the bill plays out. But here's where I think the fun comes into play, and is how and who gets impacted from an investment standpoint. Like, especially if you are interested in looking into individual stocks or maybe getting a slight one up using this bill, there's definitely some winners and there's going to be some losers based on just the three things we talked about. And Drew, at the top of the show, you said Tesla is one because they are getting, well, the bill is going to introduce increased or expanded credits when you're buying EV vehicles. And Tesla right now, I think it's trading at just under $900, which is a few $100s off from its all-time high. But it's going to be a huge it's going to have a huge gain from this bill. Whether it's going to show in the stock price or not, who's to say? But they're definitely going to see a big benefit from it.
One of the numbers I end up seeing, and it's not from stock market side of it, but when I was talking about these, they're going to expand like 260 billion tax credits from it. One of the tax credit is uh, offering $7,500 of a tax credit at point of sale of an EV. So they are really trying to incentivize people to go, I guess, more green with these electric vehicles, and saying that you can get $7,500 off of your electrical vehicle is pretty nice. The only thing that scares me with that is, does that now incentivize these EV producers, manufacturers, to then increase their selling price by that much or more, and then being like, hey, you get 7,500 off of this, even though without it, maybe we would have been, $8,000 cheaper anyways. So that's just kind of how things work anyways, but the thought behind it is kind of nice, and there is an incentive there.
So to give a little more context around why specifically Tesla would benefit from this, and again, this isn't financial advice, but originally the $7,500 subsidy existed for all EV manufacturers up to that company selling $200,000 or 200,000 vehicles. Well, this bill specifically wipes that away and says Tesla now, because they surpassed that 200,000 sale number, they're now they can now have or apply that subsidy for new Tesla sales and purchases for the consumer. And so it helps Tesla because now, theoretically speaking, they should see increased sales due to it, which in turn should rise the stock price.
Yeah, in theory, all that stuff does absolutely make sense. I know for a while there, Tesla was fighting huge to be able to get, I think, the tax credit before that. I don't think it was 7,500. I think it was like 3,500. I want to say, I could be wrong on that one, but I know when that was slowly going to be start going away for Tesla, it was like a huge talking point, at least for one, stock price, and two, Elon Musk for trying to sell the Teslas, saying, why would you take away this type of credit when it does incentivize and it is supposed to be better for the environment, which all you guys are wanting to do. So, really, it will be good for somebody like Tesla. And I think there's more and more vehicles coming out that are trying to compete with them. And we'll see who's going to be like the next hot ones out there. I know for a while there's a lot of stocks that were getting really hot with electric vehicles. Like you said, not financial advice, but I mean, during that huge run up was at almost, end of last year, pretty much. Like that NIO was huge. Workhorse was huge. You saw Nikola, you saw Tesla, obviously. And a lot of them have dropped back down, and I think it's because Tesla just shows like they are like the leaders in it, but they're not just electric vehicle company. They're a battery company. They're a solar power company. They're a future company. They're a technology company, and the rest of them are highly overvalued for potential value, and a lot of that value that people think they have is because of Tesla, and none of them are really like a Tesla.
And in that same vein, so electric vehicles need power storage, so batteries, and a major component of batteries is lithium. And so lithium producers, or really anyone that's in the battery manufacturing business, is going to be a big benefit here as well. So I'm not as familiar with these types of companies, but obviously you can do your own research. But the companies that are producing lithium to then turn that into batteries, or companies that are building batteries and then selling it and whatnot, those are going to be big winners here too, because as the economy moves to more electric, moves towards more green, at least based on this bill, we're going to need a heck of a lot more lithium or stuff like that.
Yeah, and they just passed a bill talking about the chip shortages a little bit, and they were trying to say they wanted to defend, or they wanted to help fund more onshore like U.S. chip manufacturers. So NVIDIA was a big one that's going to be getting some funding, I believe, to make some more chips in the U.S. So with more push towards EV, they have to figure out these chip shortages that we're constantly struggling with getting them imported. So we need to get those cost effective in here in the US so that we can actually get them into all these vehicles. Because if you're going to incentivize people to start buying these vehicles, they have to be able to be made and to their full potential. And there's a lot of electrical components into these EVs.
Exactly. And so, Drew, we're not obviously there yet, right? We're not to the world of we are using renewables, we're using EV cars across the spectrum, but there's going to be a bridge that needs to be crossed from using fossil fuels, gas or oil to these renewables, and that bridge is actually going to be natural gas. And so, how does natural gas get from A to B? Well, it gets there through transportation. And so companies that actually are specialized in energy transportation are going to be a benefit of this as well in the short term, because as we transition towards more of a green economy, we're going to need natural gas getting from A to B. And so how do you get there? You think things like pipelines and stuff like that. And I know pipelines are a big thing in the political realm, right? If they're going to get implemented or not. But that's something to consider is we don't have renewables aren't powerful enough. We don't have the capabilities to run fully off of renewables today. And we probably don't for the next foreseeable future. But if we're going to start transitioning away from oil, there's really only one way to go because we need energy as a society, and it's that part's not going away.
There's kind of two things I think about when I hear that. One is I feel like there shouldn't be, I mean, the let's put investments into quotations, because if the government says investments, they have like no risk behind it. They're taking our money, they get put towards something. So like, I'm going to put investments in quotations. But if they put that stuff towards EVs, I have not too much problem with that. I just don't want them to be hurting, say, like the oil side. And the only reason I say that is like if the EVs and these renewable energies are going to be so good, like prove it, like make them so good. Like if you're going to get money for it, like make sure that you make them really good. And I think Tesla's been really good at, to prove, have like some proof of work saying that, yep, these things are going to actually work. And I just hope that these other companies can do that. The other side of the coin I think is funny is when we're saying the Inflation Reduction Act, and how it's just such a dumb name for this.
Yeah.
Because I think we've been talking about green energy like our almost this whole episode so far. But one of like the biggest things hurting people's pockets right now are gas prices. And part of this is imposing more tax on gas and oil imports.
Yep.
So the one thing that I think people talk about the most is gas prices are going to be going up with this Inflation Reduction Act, because you're going to be taxing these imports more, and then we're going to be importing less, and then we're going to be producing less here too.
Yeah.
So that's just going to inherently raise gas prices.
Keep the party rolling, I suppose you could say.
Yeah,
but it's not then a fun party to be at, but it's a party nonetheless.
But then and then you do that, and you're like, well, its gas prices are high, so let's get EVs. It's like I'd rather the EV to be so good that I would just want to go over there. Like, I don't want you to stronghold me saying like, look how expensive gas is. You're way better off by just going to our EV.
Yeah. But even like the underlying of that, you still need to charge your car. So you need electricity to charge your car. And where does that electricity come from? Well, it's not coming fully from renewables at this point in time, right? So
where did those batteries come from too?
Exactly.
So there's a lot of questions. Like we always say, like the economy is, like you said it earlier, it's not black and white. And you're so I mean, it's so true. And just like every other thing, they're not black and white. There's so many other parts to go with it. So,
but that's why when you get into the nuances, you can start looking at, and don't get me wrong, I'm not a person that's going to go out and pick stocks tomorrow based on this bill. I'm going to sit in my index fund and I'm just going to passively love that each and every day. But if you do want to get into it, these are the things that you have to think through is what are the nuances and how can you take advantage of picking the right companies that are going to benefit from kind of this chaos that this introduces into the economy.
That was exactly what Kevin O'Leary, Mr. Wonderful from Shark Tank, he was on CNBC, and he said that too. He goes, hey, at the end of the day, I'm bipartisan. I'm an investor. Like, the only thing I need to know is predictability. Like, I need to know what's in this bill and how I can make it work for me. And I think really that sums up what you're trying to say is like, we have to look at these things, whether you agree with them or not. You have to understand.
Right. Exactly. Well, I'm glad that you compared me and Kevin. We're on the same playing field now, Drew. I appreciate that for like 2 seconds, but I'll take it. I bet he's a pretty good guy. I would bet he's a pretty good guy. Yeah. He's probably a really good guy, but when it comes to deals and money, like he is just like hard nosed. Like he knows how to make a buck and he's knows how to not lose a buck, which is even more important.
I always love watching like Bloomberg or CNBC or like any of those, like those business channels. Whenever entrepreneurs like that come on, or CEOs, and they're just like, they seem like the most intelligent people, and just hearing them talk, I love just listening to them, because like I feel like even in a 3-minute, 5-minute clip, I learned something from them.
Yeah, I totally agree. They so many people that come onto these shows that just drop like truth bombs or knowledge bombs, and yeah,
It's
minutes.
something you don't think about.
Exactly. Drew, but so we do got some losers on our list of based on this bill, and the first one is companies like Apple. So Apple and other companies, but they're just an example. They benefit from stock buybacks. I believe here I've got they spent over 85 billion in repurchases, so stock buybacks just last year alone, and um, they announced a new 900 billion buyback plan in April of this year. So they do a massive amount of stock buybacks, which again appreciates the stock price if which is good if you're an investor, because that just means it's extra money in your net worth. And if you sell in your pocket, I guess you could say at the end of the day. But these companies are going to get hurt because they're going to have to pay the 1% tax on any buyback. And it could be a huge strain, especially when you're talking 85 billion. And you might say, okay, well, 1% isn't that much, but they might say, well, we're not going to pay the 1% rather than put in $85 billion in stock buybacks. We're just going to give out $85 billion more in dividends and push that tax onto the investors. And so, again, it's going to be interesting to see how companies actually play this out and if there's any loopholes that they can go through. But at face value, what it's going to mean is that companies that do these stock buybacks are going to have lower capital appreciation on their share price because of it.
I love to see how these companies can get creative around this, and I'd love to see where Apple decides to go with it. I know they have always been a company that's had very strong balance sheets, and they've always kept a lot of cash on hand, and that's what's really allowed them to be able to do all these share buybacks. So does this mean Apple and companies that have huge cash balances are going to end up using that more, or are they going to still kind of keep it there for these safety nets of the uncertainties of the future? I am curious to see where that goes. I'll probably like to follow the Apple more as this goes through and just kind of see if they're going to continue on what they were doing or what they end up doing that's creative.
I wonder if you'll start seeing some more innovation coming out of this because, right, if you have this excess cash flow and they were giving it to investors through a stock buyback, well, now you're getting taxed 1% on that. But if you keep it as profits, you're getting taxed 15%. I wonder now if they're going to like ramp up their expenses more in their like research and development department to innovate more or maybe grow faster. I don't know. I'm just kind of spitballing here, but you might potentially see some innovation coming out of some of these companies.
That'd be really cool if they did, because I feel as if Apple's gotten a little stagnant. I mean, they have great products. I like using them, but I felt when Steve Jobs was there, it was the stuff that came out that you didn't realize you wanted until he showed it to you. It's like the coming out with, the initial iPhone, and now it's just been like iPhone 1, then 2, then 3, then 4, then 5, then 6, 7. And it's like not much change there, but then like the iPads came out, those are really cool. And then you see like those AirPods, like everybody loves AirPods. The Apple Watch I have, but I mean, really outside of the Apple Watch, AirPods, cell phone, and like a big cell phone, the iPad. It's like I feel like there's just not that much innovation, and I always like to see innovation out of Apple. So maybe we'll see some. That'd be cool.
Another area that are going to be losers coming out of this bill, or another set of companies, a sector, is going to be the companies that are involved with pharma. So, for example, Johnson & Johnson, those companies that now have to negotiate with Medicare, they're going to get hurt because they're going to more likely see lower profits because of Medicare now negotiating and getting lower costs for their policyholders. I think that's what it's called. I'm not quite sure when it comes to Medicare, but for the people that are on Medicare. So good thing for the population, bad thing if you're investing in companies like Johnson & Johnson or other companies like that.
Did you ever see, like, from any of the research on that, if through the negotiations that they have to take the lowest price, or they offer like 3 options and the person gets to pick that? Because you just wonder if you just end up lining the pocket of the Medicare person deciding, and then they end up picking your stuff at whatever price you want to sell it at.
Yeah, I don't necessarily know the ins and outs of that specifically. I do know that it rolls out pretty slowly. So for example, the law phases in the negotiation of different types of drugs, but I think it's only starting with like 10 drugs in 2026. And so it's not like it's like tomorrow it's going to be just all the drugs are negotiated, but over time it should help for sure.
Bold prediction that somehow gets overturned before 2026. Yeah. I didn't realize that was 2026.
In 2022.
Yeah, I didn't know that. That's actually bold prediction. That thing's happening. Like something's switching. Something's switching around. Like they cut. It passes. This is what's going to happen, but they push it out far. Not even going to be the ones decide the future. Unbelievable.
Yeah, exactly. Wild. And then the last one, the last ones are Amazon or companies like Amazon. So this gets into the 15% minimum corporate tax. So companies like Amazon that have paid lower than 20% are now. I think they retroactively did it to like 1950. No, but so
yeah.
So I think Amazon, I have written here, they paid about 6.1% taxes last year in 2021 on their profits, and so that's going to more than double, which is going to have a huge drag on their share price.
So you just can't have. That's just crazy. Like, so they are saying you just can't have deductions now. I don't know.
Yeah, to a limit, if right?
So yeah, they're like, oh, well, it's only to that 15%, and we're going to tax buybacks that we're hoping to push innovation, but then you're going to have now more taxes to that. Interesting.
Exactly. And yeah, and who knows? Again, it's legislation, so there's probably loopholes in there where you might be able to get below 15%, say like if you have like charity donations. I have no idea, but as it reads to the layman, 15% is the minimum amount of taxes that they're going to have to pay. And so companies that were taking advantage of those tax loopholes before are now going to see a bigger tax bill at the end of the day. So Drew, that was a good chunk of the Inflation Reduction Act, if we can call that that. But what would you say some of your main takeaways are from the bill, from the legislation, or from just what people should be thinking about as this gets signed into law?
Oh, key takeaway on that. That's a good one. I think, I think the key takeaway I get out of it is really try to build your financial foundations of knowing where your money's going, because it just kind of seems unpredictable with this bill that's coming through. And not to get political, but like with midterms coming up, I'm sure there's going to be a big flop on one or like switching one way or the other. So you just don't know this fight back and forth and how aggressive each political side is going to end up getting. I think right now maybe you can be like the stock of Apple and hold a lot of cash. I think even putting your money towards investments are good as well. But I think it's really just, kind of not getting too upset over this bill and just trying to live your life the way you have been. Because I think at the end of the day, it's not going to really, I don't think you're really going to see the effects of it initially. And I think by the time, maybe you did, I think this bill will probably be switched up or amended or taken away. So I don't know. It's hard for me to get a good takeaway from it exactly, but I think those are some of my big ones. It's just, there's a lot in this Inflation Reduction Act. I don't necessarily think it's going to be reducing inflation. I think it was a bill that was lumping in a couple failed bills into one with a prettier name. And I think, like we said, we were talking about most of this episode on green green stuff and taxes. And I think that's really, I guess that can be my key takeaway, is at the end of the day, it turned into an Inflation Reduction Act turned into a green energy bill and more tax collection bill.
I agree. This one is hard to put into the context of what the heck can you do from a personal finance standpoint. What I will say is I think it's interesting if you take the green part of it, the green bill part of it, and the tax part of it. How is that going to play out? If I think about the S&P 500, Tesla has a pretty big impact on how the S&P 500 actually operates. And so do companies like Apple, right? And Google, and companies that are going to get hit from this corporate tax. And so are those things going to be offsetting? Say green companies benefit from this, but then you also see a reduction in some companies like Amazon and etc. So it's gonna be interesting to see how that plays out. I'm not honestly changing any of my strategies because of it. I don't think it's gonna have a material impact. I'm not gonna be the one picking stocks. You might be able to find some big winners out there if you are willing to put in the time or maybe even taking a chance. But I think at the end of the day, I don't see how this is stopping inflation. I mean, inflation is slowing down without it. Pretty soon, Drew, like we were talking before we started recording, we're going to get to the point where a year ago, and this is how CPI is measured. A year ago, CPI was high, and so now it's not going to be as high. So inflation is going to reduce naturally, anyways, whether or not it's due to this bill. More likely not, but that's my opinion. So inflation reduction, but it's going to be pretty interesting to see how the investments into green energy spur the economy, as well as how the corporate tax and the tax on the buybacks potentially hinder it. So that's all I got for key takeaways. Not a whole lot to do, but interesting nonetheless.
It's a great way to wrap it up. I think we should move on to our next segments.
Let's go to Retweet of the Week. You got a retweet of the week this week?
Nothing really financial. I
love those. I love the non-financial retweets.
Yeah, I've not been on Twitter much this last week or so.
Same.
Talking about this I could probably talk about this and what's going on in the neighborhood, but I've been working on this flipping air conditioner for way longer than I should.
Air conditioner.
Yeah. Finally got it running. I had an extra pair of hands, a lot of help from my father-in-law to help me bend the piping and stuff like that to get that ready. But that's finally, and so I've been really working hard at that the last week or so. So I've been on Twitter, but my one retweet was two horses floating on what looks to be like a piece of wood down a river, and then the caption says, "And you're telling me that Rose didn't have room on that door from the Titanic?" So I just thought,
I think it's one of the biggest arguments in all of cinema. The fact that that door was so massive
yeah.
and Jack just could not fit on it.
And they like people will take that door and they'll take the dimensions of it according to her weight, and they'll be like, see, he could have definitely
Yeah.
gone right there. And it's like, it is a very cinematic big argument, but it's also a movie, so
I
up
do
for a real
love
event.
I love the people that are passionate about movies and realism, and they really combine the two, and they pinpoint the places where this could never happen,
Yeah.
right? And I wish I had another one off the top of my head, an
Well, it'd be
example,
like
but
it's like watching like a superhero movie, like a Marvel one, and then to be like, dude, you're trying to tell me that he would not overpower that person or something? Like, dude, you're talking about like a flying person
yeah,
right
yeah,
now, and you're trying to tell me like logically how strong this person is.
right. My favorite is Batman versus Superman. Because at the end of the day, if you look at it from like a realistic standpoint, Superman's winning 10 out of 10 times because he's like an actual superhero, where Batman is just a rich dude with a bunch of really cool gadgets. But
Oh
people
yeah, it's
battle
no
about like who's going
question,
to win. What's that?
no question. Like
Yeah.
at the end
But
of the
people are
day,
like, no, Batman could win. It's like, no, like this dude can fly. Like he can't get hurt. Batman's just a human being that's loaded, a billionaire. Like,
well,
don't tell me that he's any more invincible than I am.
they say like Superman is almost as fast as or as fast as like the Flash. So you're having somebody. Well, this is
Yeah.
us getting into these arguments now. But you're like saying somebody that can move that fast, has
Yeah.
laser eyes, and can fly and has super strength,
Yeah.
can't like sneak up on a human being when he's like working at freaking Wayne Header,
Yeah.
headquarters or
Yeah.
whatever.
You're telling me a
Laser.
guy that can fly around the world so fast that it reverses course of the spin of the globe is going to lose to a human being? No chance.
No chance.
Zero.
Yeah.
Zero chance.
Like, I like Batman. Don't get me wrong, but like, you're not beating Superman.
It's just at the end of the day, you can't. Well,
Yeah.
my retweet of the week, Drew, is Bitcoin, because I guess when I was looking at my Twitter feed, my likes on my Twitter, that's all I like is just basically Bitcoin stuff. So it's a little more not as fun because it is personal finance, I guess, which is fun for this podcast. But so Anthony Pompliano, he's a big Bitcoin guy, big investor. He runs an investment firm, but he tweeted BlackRock, which is a massive investment company. Like, we're talking like they basically run the economy at the end of the day. BlackRock is partnering with Coinbase to increase the institutional adoption of Bitcoin. Coinbase, again, is an exchange to buy and sell cryptocurrencies. He also said, it is not often that you live through the birth and scaling of a new multi-trillion-dollar asset class. And when I read that, I'm like, dang, like we are still early to the game. And if you're listening to this podcast, you guys are still early to the game when it comes to Bitcoin specifically. We're talking Bitcoin was a $1 trillion asset class. It's below that now. But when you get it up to the multi-trillions, there's a lot of room for growth. And when you get institutional investments, we talked about this in a prior episode, man, like institutions, when they start investing into Bitcoin, it's going to start skyrocketing the price. And I'm pumped about that because obviously BlackRock believes in it. They're a major investment firm. They partner with Coinbase to help adopt this. We're early, man.
I
We are
I
early.
think somebody like BlackRock has enough people. I mean, there's enough buzz around Bitcoin where obviously they know what Bitcoin is, and
Yeah.
you start having people look into it. And I think the people that have a lot of money control can start to see that they would lose it from Bitcoin, and they know that it is a huge power. So being able to get early on it and start with a centralized exchange, like one of the most known names, is probably one of the smartest things you can do, because if there's any way for you to try to control it, it would be going that route. So if they can get the adoption and everybody to hop over from there without having to like really look into what they should be doing with their crypto, they could really take advantage of that. So like I think being early to that and pushing a certain narrative is going to be extremely lucrative and helpful for somebody like a BlackRock and adoption of Bitcoin in general.
And it's not just them. Like Bitcoin is being implemented into 401k plans or individual retirement accounts, IRA plans. M1 Finance is who I use for my Roth IRA. They offer Bitcoin and other cryptocurrencies, but they offer that within those plans. And so we're slowly, Drew, we're getting to the point of what more widely adopted investments into these types of technologies. Super exciting from my standpoint. The only thing I wish, man, is I just would have gotten in earlier than I did. But hey, we're still here. I'm just excited to go along the ride and see where it goes.
Thinking about, I wish we could have done this Bitcoin. Should have, could have. I wish we could have had this
if it's in buts.
Bitcoin thought when we were in high school. But I was looking back at prices back when we were in high school, and they were still, it was like $100, $200 for a coin, which is still extremely cheap. But I don't know why I thought, if I looked back to like our high school days, I for some reason thought it would have been like in the cents or like less than $1.
Yeah, I forget what year it was when Bitcoin actually became or had monetary value. I feel like it was like in like the 06, 07, 08 years when like someone actually paid money for a Bitcoin. But yeah, if ifs and buts, right? We're kind of nuts. Oh well, we're in it now, so that's all that matters. But with
still
that,
early.
With that, let's head to our last segment. What's going on in the neighborhood? So Drew, you got the air conditioning going. Anything else? Anything else there, or do you got anything else going on in the neighborhood? What's going on?
Pretty much just the air conditioner. I mean,
that's it. Just getting the house cool.
And I think that was huge because happy wife is a happy life.
That's what I hear.
And when it's hot out,
yeah,
and you don't have AC, it was not a happy life. So
especially with a baby, like under 1-year-old.
And you just making sure like the room was always in a comfortable temperature and whatnot. And it's only been one day. We had it last night, and we had it all day today. And I've just been like fingers crossed that it can continue to run well. I don't know why. I just have a pit in my stomach. I'm just constantly looking at it. Like, I just feel like something's going to happen, like just a couple days in, and then I'm just going to be screwed. But I have to think positively and looking back.
Positive thoughts, man. That's what I've been telling Hannah almost every day this week. Like, let's just keep the positive thoughts going.
And really, at the end of the day, if I look back at it, everything I did, like, I don't think I could have done it any better. So if it screws up, I can't be too mad. But at the end of the day, it's working right now. I can have some pride in that. I'm pretty happy about that, actually. And like, I've actually, like, some people I've like gone up to, I'm like, hey, I don't know if you've heard, but put air conditioning in by myself.
I don't know if you know
with
this,
some
but
help.
I'm a pretty big shot.
Yeah, with some help, obviously. But for the most part, I did all the research, ordered it, understood how to get all the hookups. Just needed a couple of little extra hands and stuff like that. But so yeah, I was pretty proud of that. And then I was like, have you ever heard of financial nerd putting in air conditioning? So
you're a multifaceted individual, Drew. Jack of all trades.
They always say the day you stop learning is the day you should die. I'm not ready to die.
Not sure if I've
yet.
ever heard that anyone, but I'm going to say you made that quote up right now, and I'm going to give you credit for it.
Well, If that is not out there, I'm a genius.
Genius that can install an air conditioning unit into his house. I give you
Yep.
props for that, man, because I could not. There's no way. There's no way I could do that.
And you could, though. You could.
Maybe, but I'm going to give you way more credit than
Lots
maybe you
of
deserve.
YouTube. Lots and lots of YouTubes.
You learn anything on YouTube.
Yeah.
Don't even need college these days.
How's your running going? And you're waking up at 4 a.m.
It's good. We just did a 5-miler today. Last weekend I was set to run a 5K, which I PR'd, so I got a personal record on that. It wasn't an official race, but it was the fastest I've ever ran a 5K. And then on Sunday I just did a 9-miler with Hannah. It wasn't on my training schedule, but it was one when we're up in northern Minnesota at my mother-in-law's house is the only time that Hannah and I really get to run anymore together because we have 2 kids. And so usually one of us has to stay and watch the kids while the other one heads out and hits the road. So took advantage and we went on a 9-mile on Sunday. So finally to the point where I feel good again running and like comfortable and it's fun.
Mm-hmm.
So I'm hoping to keep that rolling through this half. And then
why don't you just do a full?
So that's the plan. So I've got the
Why
half.
go to the half?
I've got the half in
the
September. Then I'm running another half in October, about a month later. And then I'm going to train for Grandma's full next June. And so we'll see what I'm going to do in between October and June for race wise. But
you've already done halves. Why don't you just do the full? Just
already
switch
done
to full.
fulls.
Oh, really?
Yeah.
That's why you do a half.
I did Grandma's because I was out of shape, man.
You're in better shape than you think you are.
I am now. I wasn't then. 7 weeks ago, I was stepped on this scale and it was the most I've ever weighed outside of my lifting college days. I was out of shape. I was bad. I tried to run 3 miles and I was sucking wind.
I can't even run half a mile. So there's that.
But yeah. So no, that's kind of like my neighborhood right now. That training
running.
And we're going to the Irish Fair this weekend, so I'm pretty pumped up for that because it's Irish music time in the Twin Cities. So if you guys are in the metro area, hit me up. I'm gonna be over there in St. Paul.
I had potatoes the other night. That's kind of Irish.
Yeah, there's always potatoes at these Irish fairs and festivals. I'll give you that.
Beer. I had alcohol and potatoes, so that's pretty Irish. I have a red beard.
My biggest gripe. So every year we go to the Milwaukee Irish Fest. I shouldn't say every year, but most years we go to the Milwaukee Irish Fest. It's in 2 weekends from now and we're going this way. That part didn't really matter for the story. But I'm always so disappointed because they don't sell Guinness at the Milwaukee Irish Festival because it's a Miller hub.
No, it's Diageo. Oh, it's a Miller hub. Got you.
So they only have Miller products or like, subsidiaries of Miller. I don't know. You're the beer guy. Like Liney's is there and stuff like that.
Mm-hmm.
So they don't have Guinness, which is super depressing. Because like if I'm listening to some Irish music, give me a Guinness, at least one. I'll drink Miller Lights the rest of the time, but I want a Guinness.
Have whiskey the whole day.
Well, yeah, and here's the thing with whiskey is you can only drink it in a certain area.
Really?
Who makes these rules?
Not Irish people.
No. Probably the same people that name legislation. That's probably who makes all these rules.
Yeah. We're going to have an Irish fest, but you can only drink alcohol in certain areas, and we're not going to have Guinness.
Well, just the whiskey. You can drink beer anywhere. Beer and cider. It
doesn't sound Irish to me.
Yeah. I will say, though, they do have a stout, an Irish stout from a local brewery, which is pretty cool. Mm-hmm. It just doesn't beat the Guinness because, obviously, that's straight from Ireland.
Guinness are good, and the craziest thing with Guinness, that everybody's like, oh, it's such a dark, thick beer. It's only 4.2% alcohol per volume or whatever. So, like, it's like the same as like drinking a domestic light. Your normal Budweiser has more alcohol than a Guinness.
Exactly. And it's light. Like, it's not thick, heavy.
No, you can pound them.
Exactly. And they're fantastic.
Well, I think with all this Irish talk, I think we should wrap up this episode. This week's episode, whether you remember or not, was about the Inflation Reduction Act. Cavan and I were putting our 2 cents in, trying giving you a couple insights on some of the parts that are in it. It's a huge bill, so we obviously can't have everything in there, but it'll be an ongoing investigation to see how this actually plays out and see if it actually can reduce some inflation. But at the end of the day, that wraps up the Neighborhood Money Podcast. And I want to thank you again for listening, and we will see you guys next week in the neighborhood.